Hello, and welcome to the Retiree's Guide. Today, we're going to talk about some very important Social Security changes for 2025. Changes that could affect how much you get paid, how your earnings are taxed, and what happens if you're still working. If you're retired or planning retirement soon, this video could help you make smarter decisions. Let's get started. 1. Cost of Living Adjustment, or COLA, plus 2.5%. One of the biggest changes for 2025 is the Cost of Living Adjustment, or COLA. The Social Security Administration has announced a 2.5% increase in benefits for 2025. Why does this happen? COLA is based on the change in the Consumer Price Index, or CPI, which measures how the cost of goods and services is rising. When inflation goes up, COLA helps maintain your purchasing power. On average, this 2.5% boost means retirees will see around $50 more per month. According to the SSA, the average monthly benefit for retired workers will go from about $1,927 to $1,976. For couples where both are receiving benefits, the average goes from $3,014 to $3,089. This increase isn't huge, but it helps offset inflation, especially important for retirees living on fixed incomes. 2. Higher maximum taxable earnings for Social Security tax. Another key change: the maximum amount of income subject to Social Security tax, OASD, is going up in 2025. In other words, the cap on how much of your earnings is taxed for Social Security is rising. In 2024, that cap was $168,600. For 2025, the new cap is $176,100. What this means is if you are a high earner, more of your income will be taxed for Social Security. This doesn't necessarily change your benefit amount directly, but it increases how much of your pay is subject to the Social Security payroll tax. 3. Earnings limits for those still working. If you're working while collecting Social Security, there are important changes to how much you can earn before SSA reduces your benefits. For people who are younger than their full retirement age, FRA, all year, the annual earnings limit for 2025 is $23,400. If you reach FRA in 2025, the limit for the months before your birthday month is $62,160. For every dollar you earn above those limits, SSA withholds part of your benefit. If under FRA for the full year, SSA deducts $1 for every $2 you earn above the limit. In the year you reach FRA, SSA deducts $1 for every $3 earned above the limit, but only counts earnings before your birthday month. Important: once you actually reach full retirement age, there's no earnings test, and your benefits will no longer be reduced no matter how much you earn. Special rule: if you retire mid-year and had already earned a lot before retiring, SSA may use a special rule. For example, if in some months your earnings are very low, those months may count as retired months, even if your total yearly earnings exceed the limit. This is a big deal for retirees who want to keep working. Make sure you run the calculation for your own situation, because going over the limit could reduce your monthly benefit temporarily. 4. Higher cost to earn work credits. Social Security uses a system called work credits to decide whether you qualify for certain benefits. Each year, you earn a number of credits based on how much you work and earn. For 2025, the amount needed to earn one credit is going up. In 2025, you earn 1 credit for every $1,810 of earnings. This means you need to make slightly more money than before to get the same number of credits. Work credits are very important for long-term planning, especially if you think you might go back to work or want to ensure full eligibility for Social Security benefits. 5. Adjusted Benefit Bend Points Payout Formula. Another change is more technical, but it affects how your Social Security benefit is calculated. The SSA uses a formula with bend points to calculate your primary insurance amount, or PAI, the benefit amount you will receive if you claim at your full retirement age. These bend points are indexed to wage growth, so when average wages go up, SSA adjusts the formula. Because these bend points are changing, someone who retires or first claims benefits in 2025 may see a slightly different benefit than someone who claimed under the old formula. In simple terms, your benefit could go up or down a little depending on your earnings history and how your past income is indexed to today's wage levels. 6. Tax rate for Social Security remains the same. While many things are changing, the Social Security payroll tax rate for 2025 remains unchanged. As a reminder, the part of payroll tax that goes to Social Security, OASD, is 6.2% for employees up to the maximum taxable earnings. Beyond the income limit, you don't pay Social Security tax on those earnings, but whether that affects you depends on how much you make and if you're still working. 7. Planning advice. What these changes mean for you as a retiree or soon-to-be retiree. Here are some practical takeaways. Check your My Social Security account. If you don't already have a My Social Security account, now's a great time to set one up. With the colon notices being redesigned, many beneficiaries can view their updated benefit amounts online. Update your retirement plan. Because of the COLA bump, your monthly benefit will increase slightly. Use that extra $50 to cover inflation-related costs, or consider whether you want to delay claiming to increase your benefit, if that's part of your strategy. Reevaluate work if you're still earning. If you're under full retirement age and working, make sure you understand the new earnings limits and how going over could reduce your benefit temporarily. If you reach FRA this year, remember, no more earnings test after the month you reach FRA. Use an earnings test calculator from SSA to run your own numbers. Watch your credits. Since the amount to earn 1 credit is increasing, plan your work income accordingly if earning credits matters for your long-term benefits or survivor benefits. Be aware of the benefit formula. Because bend points are adjusted, your benefit calculation could shift slightly. If you have a financial advisor or retirement planner, ask whether this change affects your projections. Tax considerations. Even though the tax rate didn't change, the increase in the maximum taxable earnings means high earners may pay more in absolute payroll tax. Keep this in mind when doing your tax planning. Conclusion. To sum up, 2025 brings some meaningful Social Security changes. You'll see a 2.5% COLA increase, which helps offset inflation. The income cap for Social Security tax is rising, meaning more of your earnings may be taxed. If you're working, the earnings limits for benefit withholding are changing, so you could see a reduction if you go over. Work credits are harder to earn, and the formula SSA uses to calculate benefits is being adjusted slightly. These may not be revolutionary changes, but they are very relevant for anyone on Social Security, especially for retirees who still work or those planning when to claim. Knowing these updates can help you make better decisions in 2025 and beyond. If you found this video helpful, please like, share, and subscribe to the Retiree's Guide. I'll continue bringing you clear, simple updates that matter. Thank you for watching, and I'll see you in the next video.